A very good evening to one and all present here and welcome to today's webinar. On popular demand, this Friday's topic would touch upon inflation fears in the market. I would like to welcome our Chief Investment Officer, Mr. Sunil Damania, who would be helping us understand when inflation could ease and how it could impact the Indian equity market till then. Towards the end, we'd also be having a short Q&A session. Over to you, Mr. Sunil.
Hey, thanks a lot, Jason, and very warm welcome all of you. I think and you must have listened to yesterday, one of the legislators or one of the Senate grilling Mr. Powell in US on the inflation, and that clip is available on the social media. You must watch that. I think inflation has become a talk of the town today. I think in Times of India, our RBI governor wrote a piece on how inflation has been and what's happening on the inflation front. Am I right? So this is what is happening on the inflation front. Inflation has become a cause of concern not only for India but across the world, and every central bank is trying to figure it out what could happen to the inflation, and that's going to decide what direction the world economy moves and what happens to the rate of interest and so on and so forth. So it's something very similar is happening on the inflation front. Now, what I'm going to do, I'm going to make an attempt to find out when it will cool off. No one knows for sure. Remember, I have a very good track record in terms of making predictions. So I'll request, I did very similar webinar in the January 2022, and what was my prediction? And let's see what has happened now. Can I request you to please play that video before I make my presentation, Jason?
Yeah, sure. I'll just play the video.
Can we play it, Jason?
Yeah.
Yeah. So this was done in January 2022 about inflation. Jason, it's not coming out very clearly. Inflation is going to remain more persistent than transient. Of course, central banks will keep the expectation at a low, but that's how their job is. So the inflation, what we saw in the last 40 years, low inflation, I think we have break that cycle, and I think inflation will keep inching up. Now, having said that, each central bank has its own role to do that. How they manage inflation, what policy action they do, and how they ensure that the economy is not too hot, and not too cold. And the bankers has to keep rising the rate of interest. And we all know that Fed is going to hike the rate of interest to curb inflation by March 2022. And maybe most likely they will do 3 or 4 rate of interest hike in 2022 itself, okay, to curb inflation. Is this the last one? It's very difficult to say. But right now, China +1 policy, erratic monsoon condition, and grain inflation, I think it's going to bite every one of us in a very significant manner. So my suggestion to all of you is that keep a close watch on inflation. It looks like that inflation is going to remain more persistent than transient. It's not going to go away very, very easily. And hence, I would not be surprised, even in India, we may see a CPI inflation surging in next couple of months. So, as you could see that what I predicted at that point of time and what exactly has happened, I think it has come out. And at that point of time, each and every central bank was making us understand that inflation is going to remain transient and not the persistent, whether it was RBI, whether it was Fed governor and ECB and UK and everywhere. And that time I predicted that don't believe central banks, do expect inflation to go up and do expect rate hikes. And what happened in the last 6 months, the rest is history. So I thought, let me play this. Jason, my only worry is that I don't know whether video played out well or not, because I could not get it properly.
Yeah, I think there was some gray patch on the video, due to which it wasn't being able to see.
Okay, okay. So I believe everyone had this problem only with me, and that was a problem.
I think a few of the investors must have seen the gray patch. I'm not sure.
Okay, okay. Fair enough. So idea was to, but at least you could hear the video, audio where what I said in January 2022. On the same line, I'm going to make prediction now in June 2022, and I'm going to make prediction how do I see inflation going forward. Remember, the central banks across the world have lots of data at their disposal to analyze that inflation data. I'm not that fortunate enough to have so many data at my disposal to go through that. Number one. Number two, their job is only to maintain inflation while I'll do many other things. And over and above that, I'm making a prediction on inflation. To some extent, you should always take my prediction with a pinch of salt. But what I'm saying, I'm very confident that's what's going to play out. But the market has its own way and the economy has its own way to prove you wrong. So before we proceed further, just a small disclaimer that this webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance should not be construed as an indicator for the future returns. So Jason, if you don't mind, before we proceed, can we very quickly run and find out what is a mood of the investors right now, those who are attending this webinar? How do they see inflation by December 2022? Do they expect inflation to be at higher level as compared to right now, or this one? Oh, you are very quick, Jason. This is very nice. So Jason, I hope you people can see that. Yeah. I can see 47, 48. Oh, it's a very interesting data, Jason, that's coming out in this. Very nice.
Yeah.
Very nice. Wow. It's a nail-biting finish that we were going to see. House is completely divided between yes and no. It's a very nail-biting finish that we are going to see. I want everyone to participate, please, because it's very going cut to cut.
Mr. I want to tukka maar diya, lol.
Sorry.
He says tukka maar diya.
Acha, tukka maar diya. Okay. 83, 84, 83 again, 84. I want everyone here. Please participate. My request to all of you. Chalo, let's conclude. 84% is participating. Let's conclude. It's a good. Can you see? 52 and 48. Very neck to neck. Most of the people say no, that is 52%. The people say yes are not far behind, 48%. So I'm going to basically give my prediction, and if you do not agree with me, you are entitled to have an opinion, and you may be right, I may be wrong, but let me express what I feel about. And of course, I'm going to share data to justify what I believe. I believe. Remember, this is my personal opinion, not Marcus Mojo opinion. So please take it with the pinch of salt. So first thing, and the reason I wanted to put this, like, what is inflation? Because many times, some of you people do ask me when I do this review with Mojo Infinity, how does it matter to us? Inflation upar hai ke niche hai? And many times I've seen people parking their funds in fixed deposit, despite knowing fully well that rate of interest being offered on the FD is much lower than the inflation rate. So what does the inflation does? Inflation is a tax which you are paying without realizing that you are paying for it. Why? Because it reduces your power to buy goods and services. Very simple. It reduces. Now, let me give an example, classical example. And no, the reason I want to explain you this, you people, that a lot of you people have put money in the fixed deposit which earns less than the inflation rate. Suppose I'm giving an example, it could be anything. I'm taken one. You want to buy air conditioner, which costs you 30,000 rupees. Now you have a two choice. Either you buy immediately, you have the money, or you said, okay, let me put this money in the bank FD and let me buy next year. Okay, so what you are doing, you are postponing your purchase to the next year. Now, right now, 1 year FD fetches you about 5%. But inflation is at the 8%. So what happens after 1 year? Did your FD make money for you or did not make money for you? What happened after 1 year? The 30,000 that you invested has become 31,500. But the same AC which you wanted to buy at 30,000 has increased to 32,400. So your ability to buy that AC has come down. Why? Now you need to additional, put in 900 rupees more to buy AC, the same AC which was costing you 30,000. Now it is costing you 32,400 plus, but you have only 31,800 by putting money into the FD. So my request to all of you, those who are attending this webinar, inflation is a silent killer to your savings. When the inflation is high, you should look at those avenues which can help you to beat the inflation. It makes little sense to put money on assets which is not going to make any money for you. So I hope you people understand that that's inflation. It's a silent दिमाग है, दिमाग आपके portfolio, आपके savings पे वो खाती जाएगी आपकी savings. And hence you should be very, very careful when the inflations are high, which is the case right now all across the world. Do not allow दिमाग to eat into your inflation in your savings. Otherwise, you will realize how poorly you have become because of the savings is not yielding good returns on your investment. Now, let's very quickly look at the inflation rate across the world. And what I've highlighted here in the latest column, which is in red, which means that inflation moved up in the month of May as compared to April. All the data that you see is for the month of May. June we are in, so that's the latest available. In some of the countries like Turkey, it's 73.5% inflation rate. 73.5, in other words, if what you could buy at 100 rupees last year in May, the same thing is going to cost you 173 rupees. 60% in Argentina, Russia 17, Brazil 11, UK is 9.1%. You don't make that kind of a money in that FD, am I right? United States 8.6%, Euro area 8.1%, Germany. You don't see in top 10 India anywhere, am I right? And once upon a time, India economy was among the most higher inflation. In fact, inflation was so problematic that it really created a lot of problems for this country. Fortunately, India is not in top quartile. India's inflation is much lower than Canada number came out today. Germany 7.9, Euro 8.1, United States 8.6, UK 9.1. Some of the developed countries are seeing higher inflation as compared to some of the developing economy. India is only 7%. South Korea is only 5.4%. And India is in a different kind of state. Why? Because in the month of May, CPI interest only 7% versus previous month, that is April, 7.8%. In Canada, US, UK, the inflation is at 40 years high. ECB is at all-time high. ECB has not seen, European Central Bank, the Eurozone has not seen this kind of inflation since they've been formed. Mexico, 21-year high. Japan, which has been going through the deflationary pressure, is 7-year high. And India, the inflation is lower. So we are not at multi-years high, let me tell you very frankly. The reason I'm saying you this slide because I wanted to give you the perspective. what level inflations are and where do we stand. This my prediction that I'm going to make is for the Indian economy. This is not for the US, UK, Euro, or Germany. I'm not an expert on that. And hence, my comment that I'm making it is for the Indian economy. My prediction is for the inflation in the Indian economy. Now let's look at what has happened to the inflation in US. The reason I'm saying inflation in the US because that's a big data in the world economy. How many people, so human memory is very short, am I right? Can you imagine that inflation in US in January 2021 was only 1.4%. And for the month of May, it's 8.6%. Look at that steep hike that has taken place in inflation. And this is despite that almost perpendicular curve that we are seeing. The central bank made us believe that this is transient. If you read the commentary, after each commentary of Fed policy action, transient, and now they admit it looks like more like a persistent. Am I right? And they don't expect, US don't expect, their target rate is 2%. They don't expect inflation to go down to 2% even by 2024. So that's the kind of stuff. Now this is US. Let's look at same way how Indian inflation is moving. 4.6, it increased to 7.6. Am I right? Is it as steep as US? The answer is no, it is not. But it did move up. You can see it's falling. It has fallen substantially. 1 month doesn't signify anything because we did see inflation coming down from June to September, and then again it went up. Am I right? So it's well too early to say that this is a trend that we have been formed. It's too early to say so. Now, let's look at what RBI. I did webinar in January 2022. If you remember that, and that time, what did I predict? We don't go by the RBI prediction. We do believe inflation will move up. And not only inflation will move up, you must have listened to my video where I said even the rate of interest would move up. And that's exactly what has happened. So what was RBI prediction in Feb? This is Feb, April and June are the monetary policy, and they predicted what would happen to the inflation. In Feb, they said inflation will remain 4.5%, which increase, and this is a quarterly, how each quarter it will move. Then they say in April monetary policy, they revised from 4.5 to 5.7. And this month, they further revised to 6.7. So you can imagine from 4.5 to 6.7 happen in 4 months, RBI, which I predicted much before what RBI now is admitting. And they've given a trajectory how 6.7% would be June prediction. In first quarter, 7.5. Second quarter, that is July to September, it will come down a little marginally to 7.4. In quarter 3, it would be 6.2. And quarter 4, it is 5.8. We all know that RBI inflation target is 2 to 4%. That's the band plus or minus 2. In other words, the tolerance level of RBI on the upper side is 6%. Am I right? And this is what the RBI is predicted as in this month itself. Now, this is what RBI has predicted. Let's see what I look at the data point and where do I see the inflation going ahead. Now, before I go and make my prediction, let's try to understand why suddenly the inflation has moved up. Last 40 years, the world enjoyed a very low inflation. So suddenly ऐसा क्या हो गया कि inflation started moving up. The reason, and let's look at why the inflation was low and why suddenly started moving up, because we understand the difference then it becomes a little easy for us to understand the perspective, right? Am I right? The last 40 years, the world economy started opening up. There were more reforms and there was a decentralization. Like world wanted to just-in-time concept coming in terms of inventory. And the world has become one integrated market. Everyone could buy from the best producer who can produce the goods just in time, which reduces working capital requirement and at the same time able to afford or able to supply the goods and services at the very competitive rates. I don't know how many people are right now attending this webinar from United States. So when I visited United States almost 5 years back, and I was on New York, that famous street, and I was strolling around and I visited one of the leading departmental store. When I look at the white goods that were all available, most of the white goods were from the Asian countries, whether it was Korea, China, or Japan. Hardly any brand from Europe, and that would not be the case if I had visited that same country 20 years back. Why? Because people realize that let's buy product which is the cheapest available. Someone can produce cheaply, might as well buy that. And China, because of its expansion and everything, it played a very vital role in bringing down the global inflation down because it could competitive. Like Apple phone that you and me basically would use it is made in China, am I right? And that's what really happened. At the same time, some of this global economy, the developed economy, they started having a aging population, and something similar happened in Japan also. Japan has been trying to have inflation. Why? They have an aging population. And normally, when you grow old, you consume less. You are not too much conscious about the clothes that you are wearing or brand that you are wearing. Your consumption requirement goes down. Your movement from one place to another place goes down. And hence you save more and you spend less. And when you save more and spend less, what happens? It's automatically pushed down demand for goods and services. So these are two main reasons where the global economy saw a low inflation. So suddenly क्या हो गया? Has the developed economy population started becoming more young? The answer is no. But yes, China people want to de-risk that. So one factor definitely started playing out where they want to have a China plus one policy. So that's definitely playing out very significantly. But at the same time, because of COVID, some of the developed economy started pumping more money to help economy not go into the recession. So they started giving money dole out to the their citizens. What happened because of that? More money started chasing goods and services. And when more money starts chasing goods and services, what happens? Price goes up. Something similar happens in equity market also. If the more investors come to the equity market, what happens? The price of STIP goes up. Am I right? It's a demand-supply situation. But not only here, the demand increased, the supply also contracted. Why? First, because of COVID-19, lockdown in various parts of the world that hampered the supply chain mechanism. Then we saw in 2022, in fact, Russia invading Ukraine. Remember when I made the prediction in January 2022, there was no Russia and Ukraine crisis. There was no war. I again repeat, in January 2022, when I made the prediction about the inflation surging, that time Russia and Ukraine war was not there. That happened. And the global warming, because of global warming, what happened? the food grade production started declining. And top of it, the price of crude and gas has started surging. All this put together increase the inflation all across the world. And crude and gas has been a very significant portion for the inflation. So you must have read many times, one is inflation and another word is core inflation. What is core inflation? That removes fuel and the food inflation. So both are surging. But I think the crude and oil is creating a lot of problem across the world, and that's one of the reasons why inflation is at the elevated level. Now let's see what is happening to the crude oil prices. So what I've done, I've taken last 1 year crude oil prices, WTI. It moved up. Can you see this moved up? And can you see now? It started coming down. It's very close to the $100 mark. If you remember a couple of days back when I did a webinar, I did say that possibility is very high that crude can start coming down below $100 because it will not sustain at the $100 for a very longer period of time. Very high probability, again a contra call, it may start going. So I'm not saying it will happen immediately. And see, one thing I must also admit very upfront, crude is a very difficult commodity to predict. But I'm making that attempt to see that crude will start softening. Why? Because the global demand has started tapering off. Why? Because the global economy is going to slow down, and global economy is going to slow down. Definitely demand for crude will slow down. And if that happens, the crude price may come down. So that's one relief that one can expect. Second thing, copper. Can you look at this graph of copper? From 4,600, very close to 4,600, quoting at 3.74. This is dollar LBS. This is not dollar per ton. So it is $4.4 LBS here. So don't get confused. Otherwise you will say, hey, how can the price be so low? Okay. It has come down very drastically. Why is that copper has come down? Because it reflects what is happening in the global economy. The crude is down, so is the copper. Steel, which was near about 6,000, this is steel rebar CYT per ton, that's China, versus 4,300. Can you see this drop that has happened? And more so from this level, 5,200 to 4,300 level. So crude is going down, copper is coming down, steel is coming down. Let's look at aluminum. If you remember, we advise you to exit from almost all metal commodity for this reason. Very close to 4,000, coming down to 2,465. See the sharp decline that we have seen. What does this mean? Now, why am I talking about this? Because these are the same commodity which pushed up the inflation. Am I right? And there are derivatives of that. So see, sometimes crude gets used in many other commodities, like, you basically packaging and other things. Indirectly, it pushes up the demand. It increases your transportation cost. It pushes up the inflation and so on and so forth. Am I right? These are all coming down. And this is data as of today. Okay. Now let's look at the food inflation. And what I've done, I've looked at this data from the FAO, Food and Agri Organization of United States. So FAO has an index, food price index, which tries to capture what happens to the food prices. It was 113 in January 2021. It is high at 157. But what has happened? It is 2 months in a row, it has declined. It was 159. It's come down to 157.4. So it has declined. So that food inflation is also started tapering off. We don't know whether it's going to sustain or not. Why? Because of global warming, flood, and this can create cause effect. I must tell you that as we speak, I'm in Bombay, and there was a report which says that Bombay, if the rain doesn't come, there could be a water shortage in Bombay, and there could be water cuts that can happen in Bombay. Why? Because the monsoon still have not the way it should come. It has not come in city like Bombay. So we need to wait, and it's too early because just the beginning of the season. So that could create some problem for the food inflation. But crude is down, copper is down, steel is down, aluminum is down, and food price index is down. So what does this mean? It clearly means that inflation going forward should start having a softening effect. Why? Because world economy is slowing down. So what is inflation? Inflation is a mismatch between demand and the supply. When the demand goes up, the price goes up, and when the supply increases, it brings down the price. It's a simple mathematical equation. Many of you must have, when I was doing my BCom, there was a book written by Mithani, and it says very beautifully explain the demand-supply graph, and when it reaches equilibrium, that's where the price stabilizes. So what has happened? The world economy is slowing down. Why is it slowing down? Because the quantitative tightening is happening. Even ECB is indicated that by July, they will start hiking the rate of interest. That will reduce the demand. When the demand reduces, see, remember this prediction is not for the US market. I believe US will remain at the high inflation because for every 2 jobs, only 1 employee is available. So wage inflation will remain, and they've given so much money that liquidity is so lost, which has not been the case with India. I do believe that supply side constraint, that Russia and Ukraine war will subside in coming months. And we saw some ease of goods moving in and out of the disturbed region has been happening. It will get further ease. So when supply increases, demand reduces, what happens to the commodity? Price start coming down. Even some of the chemicals, I was talking to one of the chemical trader and he said, the chemical prices have started softening now. And that will further reduce the pressure on the prices. And I did one webinar on India Inc. earnings. And if you remember that, I did talk about FMCG companies. When the price comes down, they are not going to pass on that price to the customers. Why? They have taken a beating. They have taken a hit on the margins. And something similar happened, announced by the FMCG companies. And yesterday or day before yesterday, it was in Economic Times. So some of this may not get immediately passed on, but eventually it will get passed on. And that will help to cool the inflation. Central bank across the world are hiking the rate of interest, and that will further dampen the demand and the consumption. Right now, I'm making an assumption. I don't know. I'm going with the IMD prediction because I'm not an expert on the weather forecast. So I'll go with what IMD has predicted. And if IMD prediction comes true that if we are going to get a good monsoon this year, it will keep the food inflation under check. And that makes me believe that we should see a CPI inflation coming down to 5.5% by November. So we are at 7% in next couple of months. I'm saying November, that's July, August, September, October, November. Now 4-5 months, we should see inflation coming under control. And hence, I believe that whatever the RBI said, I think RBI seems to have gone little extra cautious, and I think they will assume $120 per barrel to make the prediction for the for the inflation. I believe it will I believe that inflation will start coming down drastically. So, 1 second, there is some So with this, I must give you this that I think inflation. I think we have seen the best of the peak of the inflation. Inflation may go up a little bit from this level. I'm not saying we have hit, but I think the long term, the medium term trajectory now looks like that inflation will subside going forward. So that's a very good news for all of us. With this, let me tell you that we have a very special offer of 7th anniversary. We have a 14,999 for 27 months. And we believe that market has almost formed the bottom, if not formed the bottom. And I think the trajectory of Indian equity market should start doing very well. So if you are sitting on the fence, it's a right time for you to enjoy the next upside of the equity market. So I would request, if you are managing on your own, it's a time has come that you take help of a professional advisor, and you can take help of Markets Mojo and start enjoying the wealth creation journey on the equity. With this, let's open the floor for question and answer. Over to you, Jason.
Yeah, I've seen the R word a lot in the chat box today. This question by Mr. Shri Gopal Sharma. Sunil sir, we are learning a lot about recession. Can you share your thoughts on this topic as well, and how our investments need to be relooked?
So I agree with you that I do believe that there will be a slowdown in the world economy. There is no change in my view. As I told you, Indian economy will do extremely well. India would be among the fastest growing economy in the world. And due to that, I believe that India should do well. There'll be, now someone would ask, if the world is going to slow down, how India can grow well. I think India is more domestic driven economy. There are some players, there are some sectors which are export driven. So they may underperform. But I think whatever the underperform, that's why I'm not saying that Indian economy will grow at double digits. Indian economy will slow down, but it will be among the fastest growing economy. And whatever the pain that we have seen in last 12 months or so in the Indian equity market, it's already there in the price. So I think the downside is little limited.
Okay, I'll move on to this next question. Yeah, this is by Mr. Kapil. He, first of all, he appreciates the entire webinar event, and he says, how do you see the upcoming result season considering the impact of inflation?
So, sir, upcoming result would have a little some impact of crude oil, because we saw how crude surged and it started coming down to the fag end of June 2022. Now, many of these players would have either locked in or they would have an inventory in their books at the higher level. So, I don't expect any benefit of falling price coming down in the near future.
Okay, and the second leg of his question was, you mentioned inflation eating away our monies. I kept emergency fund as fixed deposit only. Can you please suggest if this is a good place to park these funds? Else, can you suggest an alternative from fixed deposits?
No, I think emergency money should always be parked because you don't know. See, emergency money should always be parked, which is liquid, because you don't know when the emergency will come, sir. Am I right? So you should always keep which is liquid. And FD is a very perfect thing, sir. No need to basically change. So emergency money is not to create wealth. Your wealth should come from the money which is lying without emergency. Unfortunately, what I've seen people that they park more than what they should be parking as the emergency funds. So the simple thumb rule I'll tell you, sir. Simple thumb rule. You look at what is your monthly expenses. You multiply by 60. That money should always keep it as an emergency funds. Balance, you should explore and put in other different assets class, including equity.
Okay, Mr. Singh, few of the investors have requested for the 1999 offer if it's possible to give, which includes the model portfolio and optimizer. If you don't mind, could I drop the link for that as well?
Yeah, if you have the link, please drop in here. I don't have any problem. Please remember that we are going to close our anniversary offer very soon. And you will not get this price. So if you really want, and if you want this kind of an insightful webinars, please become Markets Mojo subscriber. Or if you wish to extend, you can extend also, because that's what it should happen. That will help you.
Okay, moving on to this next question. Captain Kamath says, thank you for the presentation. I will take your prediction with a pinch of sugar instead of salt. But I want to know, will it be possible for India to decrease the interest rate while US rates remain high?
No, I think RBI will be little costly. See, remember, RBI also has to defend dollar, that is rupee, sorry. And hence they would take a very measured view of that. So I'm not very sure that's going to happen. I think we need to wait and watch. And as I said, inflation will start tapering off in the coming few months. So I think immediately RBI is not going to reverse anything. In all, I think we should expect more rate hikes from RBI, at least for the next monetary policy, if not beyond that.
Okay, and Mr. Karan has asked this question. So, based on this, should we expect Nifty to go back to 20,000 by November?
Sorry, I don't have an upside view on that. What I do believe that Nifty would be much higher level as compared to what level it is right now by November 2022. Jason, you can put and record this because people will ask me in November, kya hua tumhara prediction? So I'm making a prediction that Nifty would be at higher level than what level we are today by November 2022.
Okay, I made a note of the same. Yeah, I'll just move on to the next particular question. Yeah,
I think some people are asking like D. I don't know what the gentleman name, but his name is D. He's asking, please give link for moving from 14,000 to 19,999. Do you have that?
Yeah, I think you'll have to reach out to the feedback team for that because I won't be able to put the 5,000 link in the chat box. But if you write to the feedback team, they will quickly give you a link to upgrade.
So, sir, please write to them and they will be more than happy to provide you that.
Yeah, this next question, I think after you made the statement of do not allow inflation to eat into your savings, Mr. Ramesh has asked, please explain how we can do it because it is beyond a common man's control to do that.
Very simple, sir. You should always put your assets into those assets which beat the inflation. Equity is one assets class which has always given higher returns as compared to the inflation. So, and see, remember, equity is not 1 year, 2 year time horizon. So I always keep saying that. Take out your emergency fund. You make sure that you do have enough money. Whatever happens to the equity market for next 5 years. Normally, I said 3 years, but 5 years on a safer side. And anything over and above that, you should park to the equity. And that's the best way you can ensure that you beat the inflation overall. Because your larger portion of your money then would be in an assets class which is beating the inflation. Very smaller portion would be in an assets class which will give you safety of money but will not beat the inflation. I hope that makes it clear.
Okay, I'll just pick this question from Mr. Arun Junjunwala. He has said that he received a following message that we have enabled his third tranche of investment in Mojo Infinity Power and he can generate his trades now. But he's a bit confused because in the webinar at 6 p.m. for Mojo Infinity members, he says that you said the third installment is pending to be advised. Please tell what to do.
No, sorry. Third installment, it's already enabled, not third interest. Sorry.
Yeah, he got a message that it's enabled, but he was a bit confused by your webinar where you said that it might be the third installment is pending to be advised.
No, sir, when did I make that statement? Have I made the statement, Jason?
No, I think he's a bit confused, sir, because I think you should.
No, sir, please go ahead and if it has been your advice has been generated, please go ahead and execute that, sir.
Okay, this question by Mr. Milind, he's dropped a couple of times. He's saying, dear Sunil, is it still possible that now Nifty can go below 15,000 in this current scenario?
So I don't know, Milindji, you attended my Mojo Infinity webinar, and I did predict that I think either we are close to bottom or we have formed the bottom. That's what it looks like. So there could be one correction that can come in, one more, but that's just a last correction that we should expect. And going forward, we should expect market going up. So whether 15,000, it's like you are basically predicting too fine, no one can be able to say. But I think what I get a sense now that market in next couple of months would have a upside trajectory than the downside trajectory.
There is a question by Mr. Shyam Sundar. If the world economy slows down, does that mean export-oriented companies will underperform?
Only merchandise, yes. What you are saying is right, but not the IT and software, which is a software related, they may not. But merchandise, yes, they would see some amount of impact in their top line as well as bottom line.
Okay, this next question by Mr. Cjo Thomas, he's asked, which all sectors we can expect a positive movement in the coming months after your statement?
So we need to see right now our IP is not giving us any idea which sector would lead from the front. So let's wait for some more time.
Okay, and a few of the investors have also written that infra sector isn't currently performing. Do you have any opinion on this particular sector?
See, logically that mean to the reversion should happen. The only thing, if the inflation is too slow down, it should help infra companies, am I right? Because the input cost goes down, and that really helps them to do that. So logically, yes, but we need to wait and watch before that clear-cut signal emerges. So right now, I don't have any view, to be very frank with you. Some companies may do well, but I don't have overall view on the infra. Now, there is one question, that very interesting question that is coming from Vikas. If you don't mind, can I take it? And Vikas says, does massive black economy of India also fuel the inflation? To some extent, yes. But I think what I'm getting a sense now that with GST coming in, with government asking people to follow digital economy where you make the payment in a digital, a lot of things are getting captured in the economy. And due to that, I get a sense that, the black, I'm not saying completely eroded, because what I keep hearing when I speak to the people, especially in real estate and other things, there's a black component there. But I think the proportion of that seems to be decreasing. And I think, and due to that, I believe that if assume that the black money component was X couple of years back, I think it is now X minus, not X plus. If that is so, I don't think it should fuel the inflation.
Okay, I think we got a number of questions like this, that does the massive black economy of India also fuel the inflation? To I think which you've given an answer. So, moving on, I'll just pick this one question by Mr. Raj. And I normally get these questions in Mohit's financial planning event, but I'll just pick it up today. He says, should investment in equities be a function of one's age, especially for senior citizens?
One's age, definitely not, sir. I said it very clearly. Never, see, this is all, I don't know who started that philosophy. 100 minus your age should be the, it's allocation to the equity. It's all humbug. I said, any money that you don't need for next 3 to 5 years, that money should be equity. I was doing a review with the one retired army officer, 64 age. And I told him you should allocate more because, see, I don't understand what's the logic 100 minus. If your age has nothing to do with it. If someone don't have money even at the age of 30, I would never ask him to put money into the equity market. Why? Because he's hand to mouth. How can he basically invest? Because equity is all about non-linear returns. So if you do not, so those who ask now that 100 minus age, ask him what is the logic behind that. Ask him to understand. Do you understand his logic? It's all a humbug thing. So my request to all of you, don't look at the money you don't. So there are 3 things you should satisfy. First thing, you should never borrow money and invest in the equity market. Don't bring any emergency monies to the equity market, and bring only those money to the equity market which you don't need for next 3 to 5 years. Once you take out that, whatever money remains, that should go to the equity market. Simple.
Okay, we got this question by Mr. Lakshmi. He says, hi Sunil sir, I have a question on crude oil. As Russia is banning complete oil supply to European countries, in this case, demand will increase on other countries, so prices will go up. May I please have your opinion on this?
See, again, I believe that if the global economy is going to slow down, the demand for the, whether it's a crude oil, whether it's a petrol, diesel, petrochemical, everything will come down. And if that's going to come down, what happens? It's a demand supply situation, so it will go. And remember, historically, we have not seen many cases where crude has sustained above $100 for a longer period of time. So my sense is that now, yesterday you must have read the the statement from Putin that he is saying that we will try to supply more and more to for the China and the India. And I think that will also help India to reduce its imported cost of crude oil in some manner, which will also help to pull off the inflation. So your observation is right, but I don't expect crude oil to surge further. So there could be some bout of inflation, some bout of a spike in the crude oil price, maybe weekly or maybe on a fortnightly basis. But that's not going to sustain. That's what my sense is.
Here is a question by Mr. Saikiran. Greetings, sir. Should we hold on to metal and steel stocks? Is there any positive turnaround expected anytime soon?
No, as I mentioned, we exited from metal space, and we would request you to please move on. Jason, this Mr. Pankaj Jain is saying that he was not aware that there is a Mojo Infinity event today. There was no notification, no WhatsApp also today. Can you just check? He's given his email ID also.
Can you check? We did face some issues with the notifications. I've taken your email ID, sir, and I think shortly in the next 5 minutes we'll be sending the recording to all. So in case anyone has missed out an Infinity member, we will be sending the recording in the next 5 minutes.
Even Ajoy is saying the same thing, sir. You will get it, sir. Don't worry, sir.
There was a slight problem with the notification, but you all will get the complete recording of the event which happened a while ago. I'll move on to this next question. I think a lot of investors are actually asking that, do you have any inflation-proof sectors which we can then look into investing in?
Sir, equity as a market is inflation-proof. And within that, Mojo Infinity and model portfolio is inflation-proof. So my request to all of you, instead of looking at sector or company, take a portfolio approach. And that's how you can do that.
Okay, I'll move on to this next particular question. This is actually Mr. Vedant has dropped this a couple of times. He's saying, Sunil, sir, your past few predictions are going on point. Could you please predict Nifty at higher levels as soon as possible? We would all like to see our portfolios grow.
So all your portfolio will grow. I don't have a sense of which level Nifty will touch in next 1 month or 2 months. But if you remember, I have predicted that by April 2027, I again repeat, April 2027, I have predicted that Sensex will touch 1,25,000. I again repeat, I've predicted that Sensex will touch 1,25,000. In the same way, I have predicted the Nifty 50 at 37,000 by April 2027. So I think that helps you in terms of understanding. I don't know what would happen by 2023 and 2024, but I did predict for 2027. Sir, those who could not attend for some reason, Jason will send you the recorded link of that webinar so that you will be able to listen to that webinar peacefully. Don't worry, sir.
In the next few minutes, you will get a link on your emails of the recording. Yeah. I'll move on to the next particular question. One of the investors asked about all cargo. He says your site had given a strong buy recommendation, but it moved to hold. Any particular reason why?
Because of the score changes, sir. When the score changes, maybe because of price movement, because of any other thing, we advise you, the score goes down below 70. It happens automatically. Have we exited from all cargo in our portfolio? Answer is no.
And this one question by Mr. Jagdish is saying, will recession in the USA also start impacting the Indian economy soon?
I did mention that, sir. Yes, it can impact, but not too much. It will impact the people, those who have merchandise exports to the US, not to this one. And I believe that domestic economy should do extremely well. So that will, number one, China plus one policy will definitely help India to do very well. So I believe not much. Yes, our GDP will come down. I'm not disputing on that. But the decline would not be as sharp as what we have seen or what we are going to see in some of the developed economy.
Okay, I'll move on to the next particular question. Mr. Karan has dropped this. He's saying that, sir, did your portfolio also take a beating in this particular bear run?
सर आप लोग मेरे पोर्टफोलियो के पीछे क्यों पड़े हुए हो, मैं समझ में नहीं आता है. Yes, it has also taken a beating. Many days my portfolio was down in excess of 6 digits. I again repeat, on many days, on many occasions, my portfolio was down in excess of 6 digits. So not in excess, it was down in 6 digits. Sorry, in excess is was downward in 6 digits. So you can imagine the kind of down I have also seen. But that's a part and parcel of that. Have you ever seen me be concerned about this downfall? I come almost every day in front of you, am I right? Have you ever seen I'm concerned? Absolutely not. Why? Because as long as you know what you are doing, you don't have to worry. Number one. Number two, equity is all about non-linear returns. And no assets class can give you gain only without pain. So it's a cycle that we need to all go through that. So that's fine.
Yeah, I would like to second that to Mr. Sunil. Not seen him upset on any days in the office. He's always have a smile on his face, regardless of how down the market has been.
In fact, to be many times you will be surprised to know that मैंने तो कभी मुझे पता भी नहीं होता मेरे portfolio का क्या हुआ है. Because you people never give me that time also, because either I'm doing reviews with you people, or we have internal meetings, or I'm busy making the PPT or this. तो time ही नहीं मिलता है कभी कभी तो गलती से, and I don't look at my portfolio on a daily basis also. Why? Because I know what I'm holding, and if there is no change in the reason why I should get out of that company, why should I get out? Price going up or going down should never be the reason to make an exit from any company.
Okay, I'll move on to this next question. This is by Mr. Sunil Gupta. He says, how do you see oil India in view of lower trend of oil prices?
We will definitely keep a close watch on that. And if our IP suggests that this company is going to underperform, we will close that call. Remember, Oil India is also stock of the month. So we'll send you a proper email on about the same. Hey, Victor has a very interesting question. Victor is saying, hi Sunil, if Nifty is going to touch 37,000 by 2027 as your prediction, then why we have invested so few Nifty stocks in model portfolio? Does it mean that we will miss the Nifty stocks really when index 37,000? So Victor, if you would have observed, the Nifty 50 by 2027 will consist of different set of companies as compared to what it is right now. Am I right? Your job is what? Our job is to outperform the benchmark. If Nifty 50 has to go to 37,000, our stock selection has to make more money than the Nifty 50. And that's why if you look at our Nifty 50, our Infinity portfolio or a model portfolio, over a longer period of time, it has outperformed Nifty 50 very significantly. So two things to your answer, to your question. First thing, the Nifty 50 itself will undergo change in constituents of that as the time progresses. And number one. Number two, we are not happy with index performance. Our endeavor is to outperform the Nifty 50. And if that is so, that can always be possible by not investing in Nifty 50 stocks. I hope that answers your question, Victor. In case if not, please feel free to ask me. I'll be more than happy to answer.
Okay, yeah, Victor has replied as yes, thanks. I'll just move on. I think Amrita has asked a question. I think you could just reach out to the feedback team, ma'am, and our team would love to help you with that particular query. I'll move on. Mr. Avinash saying I couldn't take your question in the Infinity webinar. I'll just take it now. He says, dear Sunil, thanks for your back-to-back guidance. I have a moderate and an aggressive portfolio along with Infinity Power portfolio. I know you will say that it is dependent on my risk appetite, but request a suggestion as to which of the two portfolios shall I convert to the Infinity one when you give that option?
See, if I don't have a data point, on what basis you want me to guide you? I should have some data points too. So again, so couple of questions. Can you take higher risk and higher return? Then only you should come to Infinity. Number one. Okay. And you don't need that money for 3 to 5 years. If both the conditions are satisfied, okay, then move your aggressive to the Infinity portfolio.
Okay. Also, Mr. Kalpesh, I couldn't pick up your question. I can see you're there in the event currently. Could you please drop your question again and I'll just pick it up? Yeah, I'll move on to this next question. This is by Tina. She says, with Chinese economy also not having an inflation problem, could you see why India should outperform China within emerging markets?
I think China is going to face a lot of slowdown in their domestic growth. I get a sense that, so World Bank has predicted that Chinese economy will grow by 4.2 or 4.3% in 2022. I'm getting a sense that it will grow less than 4%. And because of COVID-related lockdown and China plus one policy where people want to move out of China and Taiwan issue and so on and so forth, I think that's going to happen. So I think Chinese economy will slow down, and if that is so, the equity market cannot give you returns. Am I right? On the other hand, India should do well because of its fastest growing economy. So that's what I'm getting a sense.
Okay, I'll pick this question by Mr. Rajiv with respect to Nalco. While I agree that the share price of this company is going down due to downward trend in aluminium price, however, the fundamentals of the company look intact. Even on the Markets Mojo website, the dots are green. Only the technicals shows bearish. If we can hold such shares for 5 years, can we look at averaging in this company by purchasing at current lower levels?
So, what's the gentleman's name? Sorry, I missed the name.
Rajiv.
Rajiv ji, not only this reply to Rajiv ji, but everyone who attended this webinar. Ladies and gentlemen, please listen to me very carefully. You should never follow buy and hold strategy blindly. 5 saal, Mr. Rajiv has asked, am I right? You should never do that. Same Nalco, 5 years returns only 12.5%. 12.5%. Had you put this money in the FD, you would have made more money. So even HDFC Bank has underperformed for 5 years period. You should hold as long as the company's reason to exit does not get triggered. The moment reason to get exit triggered, whether you are making profit or you are making losses, you should exit from that company. So never, when you buy a company, never said I want to remain invested in this company for 5 years. Don't make stocks as your children. Don't get emotional about it. The moment you think this company is going to underperform, please move out. Whether that happens in 3 months, 6 months, 1 year, 3 years, 5 years, 10 years, as and when that happens, please move out of that. That's what my request to all of you.
Okay, Mr. Nilesh is a bit upset. He says booking loss of around 15% in the Mojo Infinity is quite painful. I do hope all this would get recovered also as well.
Absolutely yes. Absolutely yes. Provided you don't apply your human emotions, follow our advice in disciplined manner, and have patience.
Okay, I'll just pick this one question by Mr. Murli. He's dropped it a number of times. He's saying the Infinite webinars are not frequently done, not even once a month. Could you please request the team to have also Infinite webinars frequently?
I know, sir. Murali sir, my apology. You have been requesting for quite some time, sir. Sir, we don't have a bandwidth as we speak on InfinHub, to be very frank with you. I'm not an, see, you people will ask me question on the US market, US stocks, am I right? If I have to do a webinar, what reply am I supposed to give you? I'm not an expert on US market, am I right? And once if I don't give a reply, then you will say, what's the point doing a webinar? So it works both the way, am I right? You will cut us both the way. And we don't have any expert as we speak, Mujali Saab, on US market. So that's why we are not able to do InfinHub. I understand, sir. So that's why we say, please follow based on our IP. See, we don't do webinar on mutual fund also. Why? Because it's completely driven by IP. We don't do any webinar on trading80.com also. It's completely moved on IP. In same way, InfinHub. That's why we don't do it, sir.
Okay, moving on. Mr. Karan has asked this one question, and I think you mentioned in some of the previous webinars about 30 to 35%. But he says his portfolio is down around 30% in this bear run. Can he still continue to hold on to it, or if the market blooms in the next 6 months?
Please continue. Don't even, that thought should not come to you to exit, because you'll be exiting at the wrong time. Please, सर इतना पेन देखा तो गेन का भी वेट करो ना अभी अभी क्या मतलब है निकलने का. Please.
Okay, I'll just pick this one question by Mr. Preetham. He says, Mr. Sunil, you are not advised us to exit from metal stocks late, but now the profits are wiped out and we are in deep loss. What was the reason for that?
Sir, Yes, we have gone wrong, no doubt about it, and we admit. See, we are the only advisor who have a guts to come and say book losses. We had two choices. We keep giving you a false hope. नहीं ये company चलेगा long term के लिए रखे रहो, and ultimately you don't make money. So I'll give you a very classic example. I met someone very recently, and this gentleman had taken advice from one different advisor, and they've been asked to buy Ujjivan Small Finance. And every time that these people ask, he said, no, continue karo, script upar jayega, and that script went down by more than 60-65%. So we are here in front of you. Yes, we do go wrong, but despite we going wrong, we are very confident that we will recoup not only the losses, but will outperform. And that's the confidence we have. We are not God. We will go wrong. We have gone wrong in the past, and we'll go also wrong in the future also. But what we are confident about that, despite making few mistakes, we'll still outperform the benchmark. And that's what gives us. I can tell you with a lot of confidence, those who have their model portfolio or Mojo Infinity, they would have seen substantial improvement in the performance in last 1 week. The market has just gone up by 2% or so, but they would have seen substantial jump in their portfolio returns. And that's what happens when the market stabilizes, will outperform significantly.
Okay, we got this question by Mr. Sanjay. He says, what is your advice on Tata Power? Could we buy this stock or stay away?
So Tata Power, I think it was hold some time back. Let me see what has happened to that. The company has taken some amount of beating last. It's a hold. So my request would be to hold. I'll just take one question if you don't mind, Jason. This is from our Dr. Prakant. You are admitting made a mistake does not help us to recover our losses. Sir, by not admitting mistake also is not going to help you to recover losses. Am I right? What we are saying is very simple, sir. We admit we made a mistake, or our IP is not able to identify. But what is give us a confidence that if you follow advice in a disciplined manner, we will recoup those losses and will outperform. That's what I'm saying. So I think you need to appreciate that fact that we are not the advisors who are not hesitant to admit, but we are at the same time confident. You have seen that. So Dr. Saab, you would have seen your own portfolio, whether I don't know whether you're in Mojo Infinity or not, but you would have seen, or you follow a model portfolio or not, you would have seen how quickly it bounced back in last 1 week. And we are very confident that's going to happen.
Okay, this question by Prakash asked, why are you not ranking many mutual funds?
Why we are not ranking? So which mutual fund? So ETF we don't rank because ETF it's a call on the underlying asset that you have. What can be advised that? But otherwise we rate each and every mutual fund. Or the mutual fund does not have 5 years existence because our IP looks at 5-year performance. For some reason, if that mutual fund does not have a 5-year history, then we don't rank them. These are the only 2 reasons we don't rank mutual fund schemes.
Okay, I'll move on to this next question. One of the investors has asked your opinion on defense sector stocks and companies. Do you find any potential in these stocks?
Yes, we do find, and one of the stock of the month is from the defense, and we do believe that company should do very well.
Okay, Mr. Sunil, that's it with the Q&A session for today.
So let me reiterate what I said in the webinar. So those who have joined late, we do believe that inflation will start coming down in India by October, November. In fact, if you remember in January 2022, I had suggested that inflation will keep rising. There is a change in the view now. I do believe that inflation will start tapering off by October, November 2022. We do believe that market is at the last phase of downturn and it should start doing very well. This is a time for you to increase your allocation to the equity. If you don't know how, come to the Markets Mojo. We have a very good 7th anniversary offer, which we are going to close down very soon. 14,999 for 27 months. So I'll request my colleague Jason to please drop the link so that you people can start enjoying the next upcycle of the equity market. With this, thanks a lot, everyone, taking time out. Thanks a lot, Jason, for hosting this webinar. Over to you.
Yeah, I'll drop the link in the chat box. Also, Mr. Umakant Sawant, you're upset I'm not taking your question. I think he's asked about when we would be having the mutual fund model portfolios. As Mr. Sunil has previously said, we will give you a timeline about that as well. And
We don't have a timeline, sir. Umakant sir, we don't have a timeline. That's why I'm not saying. But the moment we launch it, we'll let you know, sir.
Yeah, and since most of you are model professional members, you all will get that. You most probably should get that service as well. And we have an event tomorrow at around 6:30 p.m. for only model professional members. We will be sending an invite shortly for that as well. Looking forward to seeing you all come for the events in the future. Goodbye and have a great week.